Well, JMMB is reporting $15 billion in profit for the third quarter ending December 2023. And if it sounds like a lot, that's because it is, even relatively speaking, because it is 278% more than the corresponding period last year. And I want to know what led to this. So here we have Keith Duncan from JMMB to give us the update. Hi, Keith.
Good,
You
good
are
evening.
muted. All right. Good. There you are.
Thank you,
And
Kalila, and good evening to all your listeners, viewers across the globe. Thank you for having me, and happy to share.
absolutely. And Keith, by the way, is Group CEO of JMMB. So let's start with this stellar news and 278% increase in net profits. Is it net profits? I think it's net profits. Yes.
Yeah.
What accounts for that?
Well, Kalila, really, our results are consistent with our strategy over the years of diversification. And we have been, growing business lines, banking, investments, insurance, brokerage, remittance, payments over the years. And we have diversified across countries, Jamaica, Dominican Republic, Trinidad, and now Barbados. And we have also diversified with our strategic acquisition of the Sagicor Financial, 23% of this SFC Group, which makes us the largest shareholder in the Sagicor Financial Group. That is a parent company, right? And that diversification has worked for us because we're operating in a very difficult environment in Jamaica based on the tight monetary policy and also in the DOMREP. What we have been able to see is the Sagicor Financial Group, financial corporation, able to deliver stellar results for us. And a significant amount of those gains, of approximately 14 billion, was delivered by the gains on acquisition of an insurance company in Canada by the SFC Group, Ivari, which is a life insurance company in Canada, a fairly large life insurance company in Canada. And they got it at a bargain price and were able to record gains of over $400 million and 23% of that accrued to JMMB, being a 23% of shareholder in Sagicor.
So based on what you're saying, let me
Yeah.
bring in this comment here. Where is it? Nano Sense, and maybe the name says it all, says JMMB jumping profit is a one-time thing. It sounds like it's not.
Well, SFC is there. We do our share of profits, and SFC Group continues to deliver. Where we also have good results coming out of is the DOMREP and the Dominican Republic and Trinidad, because Trinidad hasn't been as impacted by the interest rate environment because the central bank has held rates steady at 3.5%. In Jamaica, we know our central bank has moved interest rates from 50 basis points to 7%, which has impacted the financial services business in Jamaica. Most of the players in a very negative way, especially the investment business line. And if you look at the results of other investment houses across Jamaica, you would see the negative impact that it has had on this business line. It has impacted negatively our business line in Trinidad, also in the investment business line. But banking has stood up for us in Jamaica, Trinidad, and the DR, but the investment business line has taken a hit. So therefore, our operating profit would have taken a hit, and our share profit from associate companies would have been done very well for us, because insurance companies actually do very well in this type of environment, in a higher interest rate environment, in a rising interest rate environment. So this is all diversification at play. Yes, and you do have one-offs that go to the bottom line, but that is exactly it's a very deliberate strategy around acquisitions and opportunities, and that the JMMB Group has employed, and Sagicor Financial Corporation is doing an excellent job and have continued to build their presence in North America through Sagicor USA, Sagicor now Ivari in Canada, and continue to build their presence not only in the Caribbean but in the North American market.
Mm-hmm. I've been telling people that financial sector took a hit last year, and that has impacted not only my business but media businesses in general. And there's a ripple effect on what happened there. But you did mention the indirect acquisition of that Canadian insurance firm. So there was a one-off gain. But speak to us
Yes.
about that acquisition.
Well, it's it's, as I said, it's Ivara is a insurance company, from mid-income, mid-level insurance company in Canada, and it has been it was 100% acquired in about August, September of 2023, and I think it was concluded in September or early or October. No, it was in October that it was concluded, and therefore Ivara is now a 100% holding of the SFC Group, and it's a very profitable insurance company in Canada, and therefore it's going to be accretive to the bottom line of the SFC, and then JMMB, of course, JMMB being at 23% and the largest shareholder in SFC.
You know, we have a lot of investors who watch this show. And even though it is great that you're reporting strong profits, for some reason, and I have a lot of comments in the chat right now, I'm going to take a couple of them.
Yeah, man.
People are concerned about the stock price. So we have Nanis saying, trying to figure out JMMB, because if you gained so much profit for 2023, why did the stock fall so much?
Well, I mean, I believe the whole entire market has taken a hit in terms, and especially financial services. When you're in an environment of high interest rates and the Fed is holding rates at over 5%, moving from 0.25 to 0.5%, the Fed to 5%, there is tight liquidity. Money is the, how you say it, Kalina, how you say it, right? But money is the product of financial services. And if central banks are tightening liquidity, right, you are especially impacted by that because your cost of funds move. So when you have the central bank push up interest rates in Jamaica to 7%, right, and we all know where government of Jamaica global bonds were trading 5-6%, and your cost of funds in Jamaican dollars move north of 7%, and you're on the US on the US currency side, your cost of funds move from 1% to north of 5%. Your net interest income, your net interest margins are significantly impacted. That is driven by the macroeconomic environment, the monetary policy of the Federal Reserve, and the central bank in Jamaica, the central bank in the Dominican Republic. That's the environment that we're in. Now, what do? You have to ensure that you have a diversification. So therefore, the Dominican Republic would have delivered reasonable results. Trinidad would have delivered reasonable results because the central bank has not moved on interest rates in Trinidad. And therefore, diversification through country. The investment business line would have taken a hit, but the banking business line would have performed and creditably because they're also impacted. But the yield on loans, there can be adjustments over time. When you're investing in fixed income securities, the yield on your assets don't move. So your cost of fund moves and increase significantly in line with where the central banks set that kind of floor rate, and your net interest income is significantly impacted. So therefore, your profits from that line of business are significantly impacted. Now, what works for JMMB is a diversification that we have. And yes, we did have a one-off, right? And of course, we will continue with around our strategy of diversification, and also looking at how we go forward in terms of continuing to modify our strategy, because what has happened now is that we know, having the banking business line, the investment business line, now we need to reallocate capital to where we are getting the better return within our portfolio of companies. And that's the process we're going through now, to grow in a more capital efficient way, to move somewhat away from the investment business line, which has been impacted significantly, and move more into banking and move more into payments, move more into the insurance brokerage and supporting the support of the Sagicor Finance Corporation. We all sit on the board and we all provide direction there and to ensure that that growth opportunity continues.
Makes sense. So Sean wants to know, speaking of profits, where's the comment? What will the profits be used for? So are you looking at increased payout for shareholders through dividends, or are you looking at more acquisitions and, you know, reinvesting profits?
Right. Well, I mean, we just kind of rolled out in Barbados, and that's going to be a fairly small operation to begin with, in terms of that new market. But we always do have acquisition opportunities in our pipeline, and there are a number of them that are almost at the stage of being ready to go through the approval process, the regulator approval. However, that is, we have to take into account market conditions. We have to take into account what is our outlook. But the diversification continues. We have always said that we want to use the Dominican Republic as a launching pad into Central America. So we continue to look at Central American opportunities that we have in our grasp, and we continue to build out our payments business lines, like our money transfer, build out our digital solutions like the Moneyline app, which was just which we finally were able to launch.
Congratulations on that, because that's long overdue indeed.
Oh my. But listen, Khalida, we had to wait. We had to really wow you. Okay, so we had to really get it right, and we think we have a good app which is can stand with the best, right? And this will be able to give you an integrated view of your banking and your investment business. So therefore, you can go online on Moneyline, and then you can do your banking business, you can do investment business, you can buy stocks, and all of that is done online. So you don't have to. You can do all this from the comfort of from wherever you are remotely, right? And as you know, JMMB is like the number one in terms of our online platform, in terms of stocks, and therefore we are the leader in terms of transaction volumes on the JSE, and we're like number 2, number 3 in Trinidad in terms of our presence on the equity market.
Good stuff. So we've been talking about volatility in the market for some time now. Since COVID, everything just get mashed up, and you spoke about last year. But based on your latest results, would you say that things are starting to get back to normal in the financial sector?
What I would say, Kalila, is that we're at the top of the interest rate cycle right now, right? So the central bank has held interest rates in Jamaica at 7%. The Fed is now working through, when is it? They sent a signal in December that they're going to reduce interest rate, right? Now, this is all going to be driven by data. Same thing for central bank in Jamaica, right? Now, when things really start to shift is when we now start to see the loosening of monetary policy, right? And interest rates start to come off, right? Right now, interest rates are still at the peak, and they now need to move south. And that is going to be driven by inflation. So we're watching the CPI data out of the US, looking at inflation readings in Jamaica, because the central bank in Jamaica has said that they expect inflation to be outside of the 4 to 6% range for this year. That means we can expect maybe interest rates will remain at these levels, higher for longer. Or if the Fed moves in the second half of the year and makes 2 or 3 interest rate cuts, then the Jamaican Central Bank, the BOJ, could be maybe in a position to look to reduce rates, right? And then in the Dominican Republic, they had moved their interest rates up to about over 8%. They reduced interest rates to 7%, but they have held no waiting on the Fed. So therefore, if we're really going to see a sustained return the markets beginning to move once again in any significant and sustainable upward movement, it has to be driven by signals coming from the central bank and interest rate cuts. That is where we're going to have to see that happen. If not, then everything is in a wait and see mode, and the cost of funds and your baseline cost of funds is driven by the floor that the central bank set, and also that they're tightening liquidity. One has to remember that if we look at the central bank auctions for 30-day CDs, which is what they use to mop up liquidity, a 30-day CD now institutions can buy that at between 9 and 10.5%.
Before you continue, for those who are new, just explain what a 30-day CD is.
Okay, so the Bank of Jamaica, this is how they control liquidity through their open market operations, right? And the Bank of Jamaica wants to pull liquidity out of the system. So in order to reduce the amount of Jamaican dollars that are in the market, that can chase US dollars, or that can drive demand, domestic demand in the economy, right? Because they're trying to control for inflation. So they don't want the dollar to move to, and because they're trying to control imported inflation. And the dollar has been able to maintain some level of stability over the last year to 2 years. They want to ensure that exchange rate stability, because nobody wants to see the exchange rate move and then people start to reprice their goods, businesses start to reprice their goods at higher and higher levels of the exchange rate. So, everybody will say, oh, I'm going to reprice my goods at 165. No, you want exchange rate stability. So the Bank of Jamaica is going to pull Jamaica out by saying to the market, I'm going to auction CDs. So come and buy my BOJ CD.
CD meaning certificate of deposit.
Yes, ma'am. Yes, ma'am. Certificates of deposits. That's correct. And that is what they use. And then they auction these CDs, and the institutional players, they go and they bid, and they've been bidding around 10%. So that is a
10%.
Yes, ma'am.
What? Do individual investors get those kind of opportunities?
Well, their individual investors do get these kind of rates because and especially the institutional and the corporate, they do get these rates. But individual investors, that there are tiers, right, in how financial institutions deal with in set rates in their rates sheets, right? So therefore, you might find a institutional investor able to get much higher rates than, say, a retail, because because just the cost of banking and institutions versus banking a retail client.
Can probably get exposed to it if you invest in certain funds, huh?
Yes. So therefore, there are some funds that will be loading up in terms of as much as possible, but then that's driven by liquidity also, because if there's no liquidity in the system, then everyone has to now be competing for that liquidity in the market and keeping the cost of funds up. In the meanwhile, the financial institutions are trying to manage their cost of funds, because remember, the yield on their assets haven't moved. Like, for example, GOJ Globals, right? Kalila, they're trading they were 5-6%. Now, if the Fed is at 5%, and then institutional would be demanding, if 5% is their overnight rate, would be demanding 6 and 7%. That's a negative spread, right? That's what we're seeing in the market, and that has impacted the investment business lines globally. So you see that they're managing their costs globally. You see people being sent home because they have to manage their costs, because their margins have been eroded, and they have to be able to manage their businesses to deliver value to shareholders.
So let me ask you then, not as JMMB Group CEO right now, probably this is more of an EPOC/PSOJ hat, or just an observer hat, economic observer hat. What would you say Jamaica's economy is like right now for business? Is it good for business or bad for business?
So
I know you're not going to say it's bad for business, right?
No, Kalila, here's what. We have to be balanced about this, right? No, the Jamaican economy has some robustness to it, right? and we have seen the economy able to maintain growth levels. It's slowing, but it's falling back into the range of 1 to 2%. Can it sustain it? What we have been seeing is the growth in the economic activity, and the turnover in the economy is still very much there. Is that driven by tourism, driven by the return of mining, driven by the manufacturing sector? But we have seen the economy continue to grow. Now, the negative headwinds would be the fact that interest rates are this high, and therefore investors could take a wait and see attitude, and that could mute growth going forward. So if we don't see interest rates coming down, that would have a negative impact on businesses saying, listen, I'm going to go out there and I'm going to borrow money at 12, 13, 14%, when 2 years ago they could have borrowed money at 7 and 8%. Right? So they're going to think twice. And they're going to say, I'm going to wait and see, because maybe interest rates will come down in 6 months, in a year's time. That is where you could have that negative pull on the economy. However, we have seen some robustness since the recovery from COVID, and we are seeing tourism, Airbnb, and all of these areas continue to grow significantly. So there is some underlying robustness to the Jamaican economy, but the negative pull on it is from the interest rates and the tight monetary policy that we see.
But what about for individuals? Because for us, I feel like the number one issue last year was inflation. So while BOJ is doing all of this, and the interest rates, and they're trying to control inflation, we are hit with the prices of food going up every single day.
Right. And that is exactly why the BOJ is keeping monetary policy tight, because they're saying they have to control inflation, because they don't want inflation. It is to become to build its own momentum. And the next thing you know, inflation is 10%. So they are doing everything that they can do by having a tight monetary policy, taking the money out of the market so that the price of goods and services are not repriced higher. Now, a lot of this may be driven by external, or it's driven by the weather conditions in agriculture, or, the external being at commodity prices and what is going on over there in the Red Sea in terms of the supply chain issues that could emerge. And, and therefore, while inflation seems to be trending down, if you were to do a cumulative kind of look at inflation over the last 3 years, remember 1 year it was like 11%, and then it was down to like 7, and then projected to be 7. So, you're looking like 30% over the last 3 years almost. That is the erosion of purchasing power. And that's the pain that people are feeling.
Exactly.
You know what I mean? Mm-hmm.
Yeah, it's tough. By the way, when will the Ligani office open?
Okay. So what we're going to be doing at Ligani is we're going to be doing more of a digital kind of branch in Ligani, but we're going to have a presence in Ligani.
When?
Okay. That should be towards the end of the year. Let me tell you, I know it's towards the end of the year, towards mid to end of the year sometime.
Okay, because every day I pass it and I'm like, looking good. When will it open? When will it open?
Yes, we're looking forward to that too.
But that was a great discussion on the state of the economy right now. Let me see if I have any other questions online. A few of them have already been answered. MM wants to know, why is interest rate for JMMB unsecured loans 32%? Is it that high, Keith?
No, we're 32%.
But unsecured loan at JMMB?
Is that we're in Trinidad or Jamaica or Dominic?
I don't know. I'm assuming it's Jamaica, but it could be somewhere else.
I don't think it's that high. What entity is that? 32% zone. I thought was like in maybe the high teens. Unsecured.
He hasn't answered yet. Let me see if we have any more. Sean, last question comes from Sean. Is JMMB looking to partner with the JSE to allow investing in the Canadian stock market?
Okay. Let me tell you, I'm going to have to take that one and respond to you at another time. I'm not sure exactly where we're going with that.
Okay. MM says it is in Jamaica. He says it's 32% here in Jamaica.
You know, you're going to call Jerome Smalling about that.
Okay, it does sound very high.
You know, that sounds high. That sounds on the high side. I would love to check that. That sounds very much on the high side. 32% is sounds very much on the high side, but I would have to check that. I'm not sure. Let me tell you, what we use a tool called a risk-adjusted return on capital, right? So if it's a risky product, a risky loan, it's going to price higher than a higher credit quality loan, right? So it depends, because what, you know, if someone has you know, the credit quality is not as good, then the loan is going to price higher, and that's right.
Yes. So do realize that your credit score and your credit quality has a lot to do with the rates that you are offered. So if it's 32%, you're probably a high risk lendee, to put it that way. So Keith, anything else that you'd like to add before we go?
Yeah, well, I mean, no, thank you very much. But what we will continue to drive for growth and profitability, managed growth, where we call it smart growth, where we're looking to ensure that we allocate our capital and shareholders' capital in the most efficient way. We do have our shareholder value proposition. We have to ensure that we continue to ensure that our entities are adequately capitalized, that we're driving profitable businesses. That one of the lessons that we have learned over the last couple of years is that, you know, because JMMB started as an investment house, and that used to be provide maybe 50-60% in recent times of our revenues and our profitability. And when that got hit, it really threw us off. So therefore, we are happy that we had our deliberate diversification strategy, which is now paid off for us. So we're going to continue with our diversification strategy.
Thank you very much, Keith Duncan, Group CEO of JMMB.